didn't record too?
Yes, I'm recording.
There you
All right, I hope I'm recording. I'm pretty sure I just pressed record.
Yeah.
Okay, so we're going to start by just going over what I did today. Shout out to Glasswalker here for writing this little cartoon character for us. And right now, one of the things we want to talk about is just repetition and the importance of pattern recognition in the world of trading and investing on the long term. I'm just going to ask that everyone double checks to mute their mic beforehand. If you can, that would be super helpful because anyways, I think I've got them all muted. So one of the one of the noticeable aspects of any study is your time on deck. There's a quote that says the master has failed more times than you've tried. So TradingView might be difficult for some of you, so we'll be going over those things, maybe not in tonight's video, but in the next videos and the webinars we'll do in the future as we grow some of the educational aspect of other people help build this. But we're going to start here because it's a very helpful mindset to remember the aspects of the markets. Actually, what we're looking to do with CompMan is personify the individual who has an inordinate amount of time and money, so much so that it basically looks like they've become professionals at taking your money from you. Retail traders are often on the wrong side of the trade because the people who are making money on the right side of the trade, they have so much of it that they play a different game than the average person. So the difficult aspect is that because the average person is beholden to human nature, really what we're looking at is a very repetitious cycle of human nature that we can chart. And it's human nature that we can chart essentially based off the emotional aggregate. So we have a unique perspective to be able to play in this sector because it's also like venture capitalism, which means it's early seed stage capital, which can have 10, 100x gains unto itself sometimes, absolutely ludicrous. But more importantly, we're looking at the fact that this over the last 100 years hasn't changed. So don't get married to any of your trades or investments, and try to imagine that the man or the composite man that's on the other side of the trade all the time had spent like decades trying to take your money from you effectively. So he's gotten really good at it over time. I guess people keep showing up and not muting the mic. I got to get better at making sure everyone comes in with their mic muted. So Richard Wyckoff was, oh yeah, I can't deal with that. I'm gonna have to fix that. Okay, well that's I don't know how to edit these things so that everyone comes in muted. Mute. Matt, can you mute? I don't know. I gotta edit these settings so they don't give anyone muting capability. You should just all be muted. Yeah, okay. So we'll get back to this here. So excuse me on that. I just don't want to waste anyone's time, mine included. Okay, so back to slideshow we go. So very quickly, Richard Wyckoff was and is actually still, by the recognition of this, one of the kind of titans of the trading world. One of the things I think he figured out that was so, again, amazing was the personification of the market individual outside the pools, and not to view them necessarily as single operators, but to view it as like the aggregate. The other important part that he was looking at is always understanding, are you in an accumulation or distribution area? Because big money will spend a very long time accumulating in a very systematic campaign-like fashion, like a war against the price, basically. It just absorbs, chewing up more of the supply for a very long period of time. As we've gone over in our recent videos, Ethereum, 800 days to get to a moment where it's just about to break out now, like the fun part to be here, right? But 800 days of people that have tens, hundreds, or even billions of dollars accumulating the supply and getting ready to build a bull market campaign. The world of market cycle is not controlled by the retail trader. It is sold to the retail trader after market man has chewed up the supply at the bottom, marks the price up for very little cost based on what they got in, and then they distribute on top of all the retail traders who do not know what's happening and then buy the hype of the top. So you really want to pay attention to those differences. So what we try to do here is basically echo what Wyckoff did, is that he wanted to help other traders and investors realize why they were making the mistakes and ending up on the wrong side of the trade. I think we've done a really good job at this because we are quite playful. I want you to Wyckoff. I thought it was funny. We've got a bunch of Wyckoff memes, so you can find them in the Discord channel by looking at the different areas in your meme channel. But we like to make fun of this stuff. And I mentioned this on Lark Show, so some of you may have already seen this. But again, I think this is very important, is to feel this sentiment. All fluctuations in the market and in all the various stocks or crypto should be studied as if they were the result of one man's operation. Let us call him the composite man, or I like to call him comp man. People call them whales, but it's better to, again, personify it and say, look at this person we call comp man, and they in theory sit behind the scenes and manipulate these stocks to your disadvantage if you do not understand the game as they play it, or to your great profit if you do understand it. So from Richard Wyckoff. So the comment, how he always wins in the wake of the whale. So even though this method was created in the early days in the 1920s, and I'm reading a book from the 1890s, says the same thing. So Wyckoff wasn't the first, but he was the first to chart it and get really good at comparative analysis and find out which ones could do even better as time went forward. So what we're doing today is basically an act to introduce the new areas of these trading and charting ideas to you guys that have become extremely relevant for exactly where we are in this market cycle right now, which is extremely important because it gives us the capability to take advantage of the next 6 to 9 months as we move into further highs and breakouts until retail traders show up eventually. And then the markets get really hype, and then everybody is trying to buy Bitcoin and Ethereum again, which will happen. Currently, everyone we know, because we're in the Arcane Bear family, is already trying to buy more, but that's a different story. We're a niche group of weird people and a small group of weird people, not a big number. So again, Richard Wyckoff was one of these titans of traders, and in his theory around accumulation distribution, it still holds true today. That's why we can witness these fingerprints of market interests. So this is the first of the 3 PDFs that we'll be producing. We've sent out the other ones, but I decided to upgrade it and kind of go with this new dark look. I hope you guys like it. So we're looking at market cycles. And again, we did go over this in some of Lark's show, but it's important to understand. So we'll go over it again. And because remembering the important part of the very beginning of this is repetition. This is something you can not just use right now, but you can use for the next 10, 20, 30 years into market cycles and your own capabilities to build and manage your wealth. So when we look at this style of trading or investing, what we're doing is looking at a supply and demand chain of a particular stock, crypto, whatever it might be, any asset, this will work. So we can learn about how Composite Man is moving these markets. As he trades his positions, you can observe and decipher his footprints and his intentions through this idealized schematic. And it's the simplest way to do it. When things are low and oversold, you're in an accumulation phase. This can take upwards of 12 months to, just like we're seeing with Ethereum, 800 days, an extremely long time, not something you would want to stick around for unless you just for 800 days would be investing specifically in Ethereum and play like the whales. And that's kind of a good opportunity. But at the main point right now, let's just, again, simplify this: oversold and overbought, accumulation and distribution. I like to think of it as the cloud is the original Wyckoff. It knows how to accumulate, rise, and precipitate and distribute. That's how gains are made in this ecosystem. So be like the cloud. So again, this is an idealized or conceptualized version of this momentum of how things go below and above. So the time to enter your long positions is during the end of this accumulation phase, because unless you're comp man or someone in that category where you've got enough capital to not really think, which is always a nice place to play, you want to be looking for this transition right here, where you would go into the oversold phase, into the markup phase.
Well, Andy said,
and that's what we're going to be looking at today. So as we go on to the next slide here, the market cycles. So again, this is a decent amount to cover in any degree. So I don't want anyone to get overloaded with information. So we've broken what we'll be doing over the next 6 to 9 months, going through the market cycle up into different segments. So don't worry that you're like, oh, where's all the information? You don't need all of it right now. As a matter of fact, having it would make your decisions likely worse. So just focus on one thing at a time and really help define what this type of methodology offers. And I suggest actually reading and listening to other people as well talk about it, but not worry too much about if you're getting it right away, because again, this is 5, 10, 20 years. It will still work. The game has not changed because we're measuring human emotion. So if you want to be a better investor, what you need to do is take how not just how long it takes to learn all this, but to practice it, to go through the thesis, to make the observation, to have it work out successfully, to do it again the next time these things happen, because it doesn't just happen once. So because of this, there's no single source of information. And what I actually suggest and what we try to do in the Bear Den is act as a mastermind. So in the educational section, you'll find books that were written in the 1800s. You'll find PDFs from other authors or things that we thought were a nice visual explanation, because we are in mid-flight right now. And I am also mid-accumulation. So I'm limited in my time with what I can actually do to provide more educational content because I'm playing the games. Right? So it's a mixture of, I want to make sure this gets done correctly. So just stay as focused as possible, because this is something that is tactfully simple, but it's extremely complex on all the ancillary and more tertiary aspects of, like, what's your moving averages, your volume profile, like how do I draw these things on TradingView? Oh, calm down, calm down. Give yourself the time to go through this, because what we want to do is always zoom out. So when you're in doubt, zoom out. This has been going on. I bought my first Bitcoin at $90. This has been going on and will continue to go on for a lot longer if we're correct in this broad spectrum thesis. So be patient with your learning process and start by taking notes on everything that you do. So we're going to go over the supply and demand character. And again, thank you to Glasswalker for these fantastic cartoons of me here. I love this. It gives such a unique feel to the educational content. So again, this chart methodology is based off 3 fundamentals that will basically come in handy when you're looking at it. Now, some of it's not included in this PDF right now. And again, it would be informational overload. So it's not all that important where we're talking about the types of way volumes increase. Right now, just look for the footprint and ignore the fingerprints, because it's easier to recognize a footprint than it is a fingerprint. And the volume, some of the stuff that we'll go over in the more subtles of the trading range, like decreasing price spreads, etc., that's the fingerprint, and it will take time for you to get there. So just kind of ignore that and focus much more on the phase recognition on large scale time frames. So the first law of supply and demand is very simple too. This is the idea: buy low, sell high. People, it sounds so simple, you think everybody would get it, but the difficult part here is it goes against human nature to play like this. So the law of this idea predicts the direction of price that will hold constant in business or finance, crypto, or whatever it might be, when supply is greater than demand. So prices will then fall then when demand is greater than supply, right? Then prices will rise, opposite occasion. So it's an important tool to understand this approach when you're investing or when you're trading, to compare the volume bars. But again, don't get into this quite yet. It's too much. Just focus on us perfecting the ability to see these time frames, because that's a much easier focus and it gives you the time and the space. Adding too much to your plate in learning or studying right now, especially if you're starting, is just going to mess you up, and you're going to make more mistakes because you're trying to figure out too many things. So you do need to understand this law, though, even though you're not going to be using the volume bars right out the gate. But consider that this way, what you're looking for is the accumulation and distribution with the trading range is going to explain the cause and effect. So what you're going to end up seeing is the change in the price moving up as volume is actually decreasing. Again, don't worry about that too much yet at this point. It's just it's important to understand that when there's less of something and people want to buy it, it will go up. So comp man, as he chews through the wall of the supply, the price will go up. And very soon, one of his bites will push the price up 30 to 40%. One of the bites that he's been taking for 800 days will do that. And it will build up all this hype and all these things. And Ethereum 2.0 is about to be released and the market price will over blah, 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 blah. And then because market man controls the news as well. We've seen this very specifically with Binance. Market man doesn't just control the price, he controls the news. People are like, oh, Tron, that blew up because of the DeFi thing. It's like, yeah, market man knew that was coming and he'd been building into that position for the last year. Don't think he's stupid. He's smarter. He's smarter than you think. So it's you're using this relationship of that supply and demand to understand that when market man shows up or when comp man shows up, these charts, once they start to move and the demand or the supply disappears, he uses that to his advantage to spend very little money to mark that price up significantly until it gets the retail investors' attention, and then they FOMO in. So the law of effort and results is another very important part here. This is how we're going to try to trade, and why we're using this thesis is because it allows for maximum gains with minimum exposure time. Right? That's what we want. More effort, less having to do, or sorry, less effort, more reward. That's what it is, right? It's much easier. But the study here is going to be probably one of the most difficult parts, because you're going to want to have this as a tool. It's not like, oh, I get up and I trade every day and everything's going well. No, it's, you can find moments like this and you can lean into it and you can do exceptionally well. And then that usually rides for a few, can ride for a few years. And as you get better at understanding it, when you see you're at a top in distribution phase, you can just go short and you can make money in the opposite direction. But for now, just one area at a time, from going at the bottom to going up, because that's where we're moving through. So again, the live supply and demand, law and cause effect, and the law of effort versus result. These are the three main points for why we choose this strategy. And we trade through this character on a large frame is because it's the most successful. So again, we're going to look at what's a trading range. So trading ranges are the boxes that we're going to be looking at, and they are made up of progressions and regressions of where trend lines stop based off some of our like regression materials, which we'll go over. So this process involves the buying and selling by composite man, obviously, which creates these boxes. I call them box ranges, or they can be called TRs or trading ranges. There's a few different names that you'll hear them get called. So one of the things you're trying to do is endeavor to understand the position that you find yourself during these moments, because they can be profitable even if you're in the box of A after a massive selling climax into an automatic rally, take profits, wait 6 months, buy back in. Not a big deal. You can do that. But what we're more interested in right now is just anticipating the right time to move out of the TR after that accumulation rate, because that is where we are in the markets right now. That's where we are with a bunch of different market, like this, our market space, at least right now. Whatever they are in the long term, who cares? Fundamentals don't matter. I don't care what the token is whatsoever. I care about following big money and it moving the law of supply and demand. That is it. I don't even care what name these tokens have anymore, other than for me to find it, buy it, and sell it. That's the only thing I'd care about. In the long term, it's different. That's a different type of thesis. Right now, we're looking, again, just accumulating and distributing. Just, it's very plain and simple. So if you want to consider this example again, you will skip over this, but again, when you see the supply volume bars smaller, but the price increasing, that means we've hit that point of last point, what we call last point of supply. So we'll be going over some of the more intrinsic parts of this, what it looks like. So you've got phase A, phase B, phase C, phase D, and phase E. Now, phase A is made up of your preliminary support, your selling climax, and your automatic rally. Phase B is made up of secondary tests, multiple secondary tests usually. We just call them secondary tests. You could call them supply tests. As a matter of fact, I'll probably rename that to just called supply tests. It's a much better name for it. Phase C is your spring. It's your final selling climax. That was the pandemic for us. That's when everybody has blood in the streets. Like literally, there are bodies in the streets in different countries. That's when the big fund managers are buying, because they're not worried about money. They're not worried about macroeconomics. If they have an interest in something, they will buy it when everybody else is selling it at what they believe to be a discounted price. They're not, so remember that. It's important to remember that spring, that volatile moment of chaos, because if you have the time and the energy, you should be buying assets at the bottom, because they will rebound. So phase D, the test, the last point of supply, and our SOS, or our sign of strength. And then phase E, some of the more exciting stuff, which is the backup, and generally the easiest point of entry for most new traders, because it rewards you quickly for your ability to adapt and interpret these trades successfully, effectively. So Phase A, again, the preliminary support. This is the point of buying shares or cryptos, commences and basically marks up the line after being through a prolonged retrogression. High volume is generally expected at the beginning of the preliminary support, and the prices are spread marginally. Again, some of this stuff, it's important to learn later on when you're getting perfected at, like noticing the fingerprint and how strong that fingerprint is versus another fingerprint, effectively, like comparative analysis. But for right now, just get close. It'll yield enough results for you to learn, and then we'll go from there. So your selling climax is again also in phase A. It's the gap as these prices narrow. You start to hit like the very bottom supply where there's no one left selling, and comp man just absorbs all that. Automatic rallies are then the pressure of selling diminishes, and comp man basically buys up the entire wall and then starts to distribute just to check supply again and crashes the price back down, which brings us into phase A breakdowns too. So again, in the end of these points before the supply, you're looking for when the cycle ends, and you're looking for the building. So the automatic rally here will effectively build the top of your trading support. So again, you can focus on the behaviors of these patterns. And I like, you just super simple, you draw horizontal lines in TradingView. That's it. It's not that big of a deal. And we just label our very strong areas of, is this a PS, an SC, an ST, an AR, etc. So effectively, when we go into phase B, this is where we see these supply tests or secondary tests, and it's kind of a recurring point to the bottom of the trading range again. And these could often bounce multiple times again. So just remember, supply tests or secondary tests in phase B happen usually multiple times, one or two, pretty easily over the course of a year. So this box range is usually probably around 60 to 90 days, maybe even longer again as well. So we'll just kind of skip over this. Phase C, again, this massive final selling climax. I just wanted to, in this PDF, give you guys as much content to refer back to about what this is as we grow, because again, it's more for you, more than you can digest in one moment, probably. But this is the selling climax. We can just simplify it to that. I've written more about this too. Just it helps define the bottom of your trading range in phase C. So phase D, this is where things start to get exciting for the average investor, such as myself, or for the retail investors near the end of phase E. So you start to get your test, your last point of supply, and your signs of strength. So your test is just a test of the supply, usually right above the spring. The last point of supply is usually a pullback that brings the price down somewhere almost as far as the spring sometimes. Remembering that these are volatile, illiquid assets, you can see a wide range of kind of erratic behaviors in the market itself. So as we've seen with IOST recently, it dropped all the way back down to the bottom of the box. Or just before Binance took off, we had like a 15-minute period where it just like tipped into the bottom of the box, basically. So the LPSs can actually go quite low. So always make sure you're prepared for the feeling of what phase D looks like, because it's kind of slow, but it's one of the easiest places to make a long-term observational trade where you can make an entry. Don't use a stop loss, just use a very small amount of capital and prove to yourself that you know what you are doing. Very clear right this point. You need to know what you are doing, because none of this is financial advice. In the group, there are tons of great analysts who are able to identify the footprints, and even more so now the fingerprints of what some of this stuff looks like as they become more powerful, and which one you'd want to be over and say over another one. So in learning this process, you need to be aware of these things yourself. So to do that, it's through an actual execution of a campaign. You can do that with a very small amount of capital. Just use a very small amount so that you can sit through the whole phase movement, because phase D can take 90, maybe 120 days sometimes, maybe longer, to produce these three. But if you're in that, you'll get to feel what it's like, and you'll get to recognize that your observations are correct. So you don't need me telling you if you're doing it right. So one of the plus sides of the mastermind is you can bring your work back, you get it peer reviewed by a bunch of other people, and you also bring something valuable back to the group, which everybody else is doing. That's why there's all these great charts that we allow to be posted or reshared from when members share very exciting stuff in the Wyckoff area. So you can look in there and you can see some of our other great members' posts about what this stuff looks like, because there's more than just any one of us can capture, and they don't all blow up at the same time. Market Man moves them individually, because then he can also make more money that way. So phase E, this is the backup phase. This is a typical structure that precedes the substantial price markups of the SOS phases. And to note that there are also minor SOS phases which jump across the creek and then come back all the way down to your regression lines in the creek. So be careful of that. I did get that wrong with BAT and algo and quantum. I thought we were in a major SOS when we were apparently in a minor SOS. So be patient with that and look for a backup that's actually turning around. You want to get into the backup, into the turnaround. So if the backup starts to fall all the way back to the bottom of the regression line, I'm building a position into that. But when it turns around, that's probably a more successful time for the average trader to enter, because they can rely on the momentum and the direction that they would like to be successful, but they have to have already clearly made like a logical indication that they know exactly where they are in that chart. Otherwise it won't work out. This is a thesis, and just like any experiment or hypothesis, if you don't follow it, it doesn't work properly. Effectually, the better you get at this, you can incorporate like more strategic things like using a stop loss. But for now, just use a small amount of capital to prove that you know what you're doing and let the trade ride, so that you don't get weak hands and walk away from a trade that might just develop an extra month or two later, and you would have gotten right, but instead you got emotional, you wanted to make money too quickly, and you make a mistake because you jump out and go into something else like Omise Go just at the very top before it comes collapsing. Don't do that. You want to build a thesis like this so you can remove emotion, you can make your trade, you can make your exit, and you can move forward financially without getting emotional about it, without getting excited or upset. Either of those will get in your way. So here's one. We looked at this one out in the wild. This was a great trade. Glasswalker, you there? So Glasswalker has been with us for a bit, and
Yeah.
nice. So
I'm here.
yeah. So I mean, everyone else here is new, I'm sure, but remember when Leah brought this trade right at the back, like the final portions of this backup phase. But we had charted it back in July.
I'm here.
Leah's here too.
Yes, I've been listening.
Oh yes.
I've been watching my student Tio come to fruition on our Discord, so I've been quietly watching.
Yeah, beautiful. I love that. So Leah, you recognize the exact
Yeah.
change of character of Tron here, and I actually really like how you've been able to find some of these change and regression lines, because you find them when they're changing here. My interest in this whole thesis has been about box D, which is give me 90 days to spend money. Like, oh wow, like, because then you can really move some capital around. But I think what's very unique about your focus here was that you identified this right at the turnaround. So we had been charting it in the group since we were here. I don't. Yeah, I have the link here. I just if I click on this, does it open? Oh, it doesn't open right now. Okay. And anyways, if you want, you can click on this link in the PDF and you can play it back. We posted on like July 26th. Now, again, here you can see the LPS phases do come back down as low as the test sometimes, and it comes down maybe even to touch the trading range, but just never as low as the spring entirely. But catching this backup phase, whereas here, you've got Algorand, BAT, Quantum, that all ended up coming back down to a regression line, which we've gone over a little bit. I don't have the charts here, but you made such a great change of character call on that one. I really, really appreciated that, because that's such a valuable point for most people, because it's a very quick validation of your ability to recognize where you are in a trade, versus say like what the 180 days it took to go from the test to the backup, maybe even longer. I think in Omise Go, the entire backup phase, it was like 45 to 90 days or something. And you right at the change of character of Omise Go too, you caught that one. So I've been really impressed with your capture of change of character in those backup phases, because they're obviously potent.
Well, as we know, and we discussed, I didn't actually have the Wyckoff language for it, but I call it different things. And then through this experiment, we've discovered that, that there's actual, we can look at the Wyckoff, but as you and I discussed, I've been trading for a while, but I knew I was finding breakouts, and that's my strength, but I didn't actually have the Wyckoff language for it.
Yeah, you've gotten really good at it too, at finding that moment right as they change character in phase E. It's fantastic.
And I call
Um,
it the energy explosion.
Yeah, it seems to look like what we're charting. When I started to break it down, it's through these what they call regression lines. It's fantastic. There's some really character plays we'll look at as we go for the few months forward. But EOS back in 2017, if you look at the way it moved through its regression channels, it's just absurdity. Like Tron could still have a long ways to go. I liquidated I think all of my Tron position after it jumped up out of there. I was like, screw it, Tron's going up, well, everything is going down. I'm like, close that shit. Like, um, but anyways, yeah,
The beauty is there's a re-entry, right? Because the LPS and backup happens consistently in the momentum up. So
yes. Yeah, I think that's why for the new or the beginner and the learner trader is to go with no stop loss, but just limit your account size. That way, if it goes lower, you're still in a position to check your own personal thesis. Like, did I get this right? Because that's
yeah,
what matters the most.
yeah. And I'm experimenting with percentages and how much percent each backup usually gives us. And right at this point in time, it's usually giving me between 30 and 40%. So that seems to be the general legs up that you can take profit in, which usually has a representative point on the chart. But yeah, I'm sort of doing my own thesis on how long each backup phase before the next one, next LPS.
Yeah, it looks like the part of the big issue is liquidity supply and what hands are holding that position to begin with. Like how good of a job had Compman done shaking out before he moves into his real position? Because he seems to test like the other day was climactic in the emotions. Like the VIX shoots up 30%. Like for what, guys? For what? Like everything's fine, and everyone's scared like the crypto winter is going to start again, and Ethereum's clearly in a bull market as far as I can tell. Like it's just in its like Ethereum's in its obvious backup phase now, right? Like it might take 90 days, but it's in its backup phase. Um no, yes. So I'll just finish this here. Thank you, Lee. I'm glad you're here. I really appreciate that.
Back to stalking in the background.
Perfect. Um So phase A is our first area. This is where there's a lot of absorption coming in from the composite operator, and he's absorbing supply through the primary support and the selling climax. You see a big automatic rally, and this is where he buys up the first part of the wall, and this is where the trading range is defined. The second part is phase B. It's where we move into the secondary tests, or what I'm going to start now calling supply tests, because it still matches the ST breakdown, but these are supply tests. You have the spring, which is, what's crazy, I've realized, but my job basically as an investor is to wait for the moment where everyone's scared shitless and then just meditate calmly, drink my tea, and buy the out of everything I can get my hands on effectively. Because the best thing to have been doing during the pandemic apparently was just buying every distressed asset you could possibly get your hands on, because it was instantaneous gains as soon as there was some type of normalcy. And I do believe that there's reminiscent conversation around that in a bunch of different cultures, languages, about chaos and opportunity and blood in the streets, and that's when you should be investing. But very clearly, that's not just a metaphor. That is a literal that is a literal contract to the idea. So I've realized that my job, yeah, is basically to learn how to meditate when everything is thinking that the world is going to end, and invest then. And when everybody's thinking everything is amazing and going super well, that's when you sell. It's counterintuitive. It'd be like trying to look for a partner that was like down in the dumps, and then as soon as they started to do really good with their life, you like ditched them. So it's counterintuitive again to follow this nature. So you really have to build patterns outside of it. So here's where the opposition of this idea starts, which is in the spring, which is counterintuitive to, you think like a pandemic's coming, I should be more conservative with my assets. No, that's when you should be investing. When things are going really well and you're at near a top, that's when I should be really excited and buying more. No, that's when you should actually be selling. So phase C is a highlight and a high mark of our understanding the low, because we need to look at it from, again, human nature. We are charting when people are scared, and the weakest hands get shaken out finally here. The next point that we move on to is the test. And phase D is basically characterized again by this high demand and minimal supply. And that's why we see price advance start to move through the box. This is the most exciting part for me, I think, even though Leah's backup phase checks are obviously the most exciting. I like this. I suck at jumping around and doing a bunch of things. I'm not very, like, I can juggle 3 things maybe at once. I can play, I can play 3 instruments at once, at least 2. So maybe that's like a little bit of an understatement. But anyways, the point of this is this much time, like say 90, 120, 250 days sometimes through this phase D. This is an area where all I do through the rest of this time is I just invest capital in a systematic campaign-like fashion, chewing off bites and becoming more and more confident about my position, and witnessing Compman's movements, which is the news. How does Compman play the news? Like what was going on in Tron and Justin Sun's conversation and Twitter feed. If I'm looking at phase D, I'm looking for absorption of supply and Compman making news. If I see those 2 things together, it means that there are professional market makers in that ecosystem, and regardless of if the technology is good or not, the price will go up. Seems pretty simple, right? So phase D, or phase D into phase E is where you get the sign of strength, and it effectively moves. Someone, we got to mute someone here. There we go. Okay, that should have worked. Hey, Jerry. Jerry, can you mute? Can you mute? I can't mute you for some reason, Jerry.
Jerry, you need
Jerry.
muting. Jerry, Diane, help him.
Yeah. Right, Jerry.
Jerry.
Maybe I'll just
Jerry.
Yeah. I'll just remove him for a sec. He'll come back online. I'll figure it out. Oh, he won't be able to rejoin again. Oh, damn it. Okay. I don't know why I can't mute Jerry. It's so crazy. Okay, I'll just remove him. Jerry, I'm sorry. I have to do it. And that didn't work either. What? Okay, I'm just going to keep going and pretend that that's not happening. So phase E is our backup point. This is the easiest point of entry, I think, and very, very clearly identifying the character change is one of the most important parts if you're looking to find a validation in the thesis quickly and with maximum gains. Again, for me, I'm a very excitable person. I like to build into D, because then that way I can just be patient with E, and I don't have to get it right the first time. I just have to be patient. And if I see a lower LPS, just like you did here in Tron, this is just an opportunity to buy more. That's all that represents to me. But this is where again, Lee, I think, has done a fantastic job of showing that you can find right on the regression channel changes and the last point of like one of the very last points of supply before breakout in the momentum. So this is just kind of the breakdown. You can find different variations of a breakout channel. So we've talked a lot about rising gradient bottoms going through the box. You can see a cup and handle come through phases A through E effectively as well. Double bottom was what we had seen in Tron, what we were just looking at. Falling wedge is what we had in Seller, Fetch, One, very powerful system. We had from spring in both Fetch, Seller, and One, it was like 200% gains to the top of the box, just insanity. So all of these represent different ways that price patterns can move through the box in a much larger area. Here you have an inverse head and shoulders where the SOS is coming through the box of D, and you have a right shoulder into E sometimes. This is kind of what we had, I think we're having with ontology. Anyways, so these are important to recognize, but again, I don't want people to get too caught up learning too much. What I want to focus on right now is this last slide, and we'll leave it to this before we let anyone ask questions. This is the theorem right now. Here is a buying climax. This is where distribution starts. We came down here. We started distributing big shares selling. Look how little the volume was to get the price to drop like that. Just in, it's like nothing over here. So the price drops and they keep distributing. A year goes by, they hit their primary support, they're selling climax. 800 days from selling climax to where we are in this backup phase right now, and maybe even another 120 days in the backup phase to bring us through till the end of the elections. We're in a bull market, and I don't think anybody knows yet. The people that know are the people that recognize this pattern. It's the large market operators. And now us. How exciting, because this is extremely strategic advantage in your early days of investing to understand how this works, to be patient for it, and to understand that once you know this is a 5 or 10 year, 20-year game plan that you can consistently add into whatever you're doing. So maybe you like tables and you like building tables. Build tables and you sell them or whatever. And every now and then there's a moment in time where you see that you should be moving fiat into something that you think is interesting, or maybe even Bitcoin at this point, because I'm usually buying these other distressed assets for its Bitcoin's price. But here's Ethereum versus dollars. This could represent a time where instead of getting dragged through the mud and having to just buy and keep thinking like, oh, when's the bull market going to start? Oh, here, it's right here. This is a great time to be accumulating through D and from the spring, apparently in the height of the pandemic, ladies and gentlemen. That's the best time because there's only upside from there on out. That's something to meditate on. There's a very, very funny joke there, I'm sure, but the spring usually happens in spring for some reason too. I don't know why, but the consciousness is a crazy thing. And then this portion here. So even if this thesis is new to you guys, we're going to leave this box every step of the way here. I'm going to be buying and accumulating, probably even up into this area. But this is going to be the proof. I haven't. This is the first time I actually rode through this experience in 2017 when I started buying Bitcoin. Well, not. It wasn't the first time I bought Bitcoin, but the first time I started buying because I saw the character change when Bitcoin went back to $400 after I'd been holding it since I bought it at 90 up to 1,000 back down. I'm like, wait, is that 400 again? And now it's 600. I'm like, oh, here we go. This is a character change. When it happens, it's noticeable. You don't always need this strategy to see it or to feel it. If you have been in an asset for long enough, you'll be able to tell. You'll be like, oh, something's getting different, right? Market man's making a move. This is where I believe we are. So if anyone has any questions, I can go over that, and we'll stop this for now. And yeah, let's if you guys have any questions, I think you can like put your hand up, like there's like a raise your hand button, and I can unmute you, or you can probably unmute yourself and ask the question. So yeah, yeah, as you will, I guess. Oh, I see. No questions.
There's a question in the chat to you.
Okay, so what are the major volume characteristics that correspond to the Wyckoff or the Wycliffe points that confirm the pattern? At this point, again, guys, I don't really want you to. If you haven't yet, I highly suggest reading Nassim Taleb's books, all 5 of them maybe. But more importantly, I want to highlight one specific part of one specific book, Black Swan, where he goes over some scientific research that talks about the human nature's ability to recognize a confident data point based off how much data they're given. So 2 groups of people. The first group of people are given a very gray and blurry image with a little bit of red in the center. Second group of people, same gray and blurry image with a little bit of red in the center. Now, at the end of this process, what you get to see is that it's a fire hydrant surrounded by concrete. That's what the end result is. But as they're going through this, they gave one group of people 5 changes to go through. 1, 2, 3, 4, 5 successively, and then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 slides to go through to see the change. Now, what was noticeable is that it actually took them a lot longer to come to a concise decision that they were seeing a fire hydrant the more data that they were given. One of the reasons why we use the area chart, the line chart, why we remove the EMAs, why we try to get rid of as much of the noise, all the macro crazy crap people talk about, is because it gets in your way of making a logical decision based off very few indicators. We use them later on for ancillary stuff like double checking our positions, like deciding how much we want to go in, how strong they are, how high they can go, when to exit, more importantly, because it's a much shorter time. Distribution happens in like months, sometimes like weeks for full top distribution. So whereas accumulation takes upwards of 800 days, is a very different monster to pay attention to. So getting into volume characteristics are just going to get in your way right now, because it's going to add another image in your way where you're just trying to see the fire hydrant. Like you're trying to make a clear and concise decision about what you're seeing, and the volume will get in your way because you're probably going to end up having to try to learn too much out the gate. So I don't think it's the best thing to do. It's just give yourself time. It'll make sense. This is a lifetime formula. Once you know this, you can use this for the rest of your life. I don't think humans are going to change that quickly. I mean, I would be surprised if they did. That'd be amazing, but I really don't believe that's going to happen. Surprise me though, universe. Surprise the shit out of me. I would love that. Like, let's just free infinite energy. Let's go. So if there's no more questions, Leanne, how you feel? You got anything you want to share?
I was just going to say, just as an example to everyone, something caught my eye this morning, but I haven't looked at it properly, was KMD. I think that's in a very strong accumulation pattern, and I thought it might be a good one to look at to see where it might be.
Okay, let's do that.
Yeah.
So we're opening a trading view at JND. This is not a thing.
KMD, yeah.
Can we see my
KMD?
on Binance? Okay.
I haven't checked. I think the chart that caught my eye was wasn't sure if it. Yeah, there we go.
Okay, this is a really interesting conversation here, Leanne. Wait, would you prefer Leanne or Lee? Now I've seen your name as Lee.
Lee. It's confusing because the LEA looks like Leah, but no, Leanne or Lee is fine.
Okay, I see. I just got so used to calling you Leah Bear.
No, it's okay. Most of my crypto friends call me Leah Bear.
Right now, that's why I called Glasswalker. I'm like, I don't even remember your name anymore. We're going with screen names, guys. So you've brought up something here. I think that's a really interesting topic of conversation, which is, okay, let's quickly draw our box here, and then as I'm doing this, I'll kind of discuss my sentiments here. So I think that what we're witnessing here is an unprofessional composite operator. So maybe we're not even witnessing a composite operator at all. We're kind of witnessing general market accumulation, which is neither good or bad. It could be a result of the fact that what you'll get here is just a diminished growth out of the box, effectively, because supply will eventually get eaten up and it will go higher, but how much higher? So part of this, I think, becomes part of our comparative analysis, which is when we're finding potential moves here, like like here, where's the spring, right? Well, here, I mean, we've got March, like this would be the time frame, right? This would be the time frame of the spring, because we have that. This is when the pandemic started, right around my birthday, or here, like, this could be the spring too. Maybe this whole thing is this like kind of a spring. Because this is the pandemic and the riots, effectively, right? Again, maximum insecurity in market volatility are these bottoms. So what we're seeing is at least that there's a bottom in supply, but it doesn't seem to show me that there's obvious buying power. Now, in the volume section down here,
can you measure the sorry to interrupt, can you measure the percentage distance on each test of that resistance? Like, is it each test? There's 1, 2, 3, 4 tests down there in the small range.
1, 2, 3. These ones.
Those there's about 4 I can see hitting the same resistance point. If you move your box down lower.
Lower than the selling climax.
So where the selling climax hits, what is the percentage distance that it's taking its little
the
mini screens? Yeah,
These
yeah, those.
to the POC
Yeah,
line, 26%.
right. So it's doing 26. Yeah, I was going to say around 30% because that seems to be my thesis at the moment, that they take 30% tests.
Yeah,
so
that was, we saw that in BAT and LPS, or sorry, BAT and Algorand. And although the big, as soon as you get into an LPS, they get much higher, but the tests,
yeah,
the tests in the spring can be almost similar. Even the LPS can come that low. So, but what I think here, though, Leanne, is that we're actually seeing a lack of market interest because there's no real identifiable market hand. Whereas, like, now that I look at Ethereum, I'm like, oh my Jesus Christ! Like, this is a professional market. This is a professional market maker. You know, this is like this is comp man. Yeah, you know, and even I think BNB was so clear. You know, with like the way it responded to this regression channel too, like right in this moment here, I thought was fascinating. So I think what we're looking for is trying to find the more defined this test and LPS is, the more professional the market maker is, or potentially the more money that pool has. So it's probably going to get you're going to have yield higher results. Like when BNB.
This is the big Titanic ships as opposed to the little grasshoppers just leaping up.
Right. Yeah. So what is Komodo's market cap? That's a, you know, this is
I
a good
think it's
question.
very small. So yeah, the risk is that you can put a tiny bit in it as an experiment to anyone that's new, but I think this is one to watch as an experiment. Because if you have dead money in there and it's not moving, then it doesn't matter if it's 3 months, that you could have had opportunities elsewhere. So yeah, there's a difference between a dead accumulation.
Well, I think you're right, though, is that even with a market cap this low, just even general market interest by not professional market makers will chew up the supply and eventually move it out of the box. I mean, I think that's what we're witnessing, is that because there's so many people that I don't think would have ever normally entered the stock market are here in the crypto space because they're interested in the kind of the new thing. So I think we're getting a lot more retail interest that's kind of represented by something like what we were just seeing in Komodo, whereas in Binance, you know, this moment here was crazy. This spike right into the center of these two regression lines. So this, like, here you have a multi like a year downward regression line from here, and then you have your upwards regression lines as we start to move out of the box here. We spiked right down through the center of this, like this, for about 15 minutes, like this low.
Yeah.
Oh yeah, it was gorgeous. And what was interesting too is that within an hour or two of this, you had news come out as it's going up, and then the spike to the top within a few hours of the position, and then now out of the the regression box. So it's very likely that we'll actually see that SOS, or what we might call a mini SOS, depending on how big the backup phase. But I think it'll actually come back down to here. When this happens with Binance token, I'm gonna buy so much fucking BNB. It's gonna be absurd. I'm like, I might as well whatever. I'm gonna buy an enormous amount of Binance token when this backup phase comes into play, because I had spent 30 days building a position here. You know, I think Glasswalker, he was on the call with me. I just kept buying Binance token in this box. I was like, I love it. DeFi, liquidity pools, all this fun stuff. So to see this, such a beautiful variation, again, with so much time put into this trade. You know, and this is where I think the retail trader has a hard time. You're talking about 53 days, but buying on a day-to-day basis to build like a thoughtful, well-placed campaign, to get a 33% gain. But maybe like 180, 200 days from now, that's when this is going to be exploding.
Yeah. I think my Ethereum campaign started at $240 back.
Yes.
I've been holding that for months. But I spotted a large, where is the 240 mark on that
Well,
channel?
yeah,
I
this is actually when I started making my first entries too, is because this is when I started to recognize what reaccumulation was, and we'll go over that in some of our next PDFs. But Leanne's ahead of the class, so we're this area here, Leanne, where we see this another box and trading range start its ascent, and this break across the creek and the close above the creek was hyper bullish.
Yeah, and there's an example of the mini Wyckoffs I keep talking about. There's little patterns within patterns too, and that's what, yeah, you need to get competent at recognizing, but just takes time and practice.
Yeah, and the more you start seeing it too, that's, I think, the fun part is then you're like, oh, I know what to do with this. You know, in July when I bought more Ethereum, it's like, because I knew what to do with this. And what I think we're about to witness here too, and see how I love this too, from top of regression channel to bottom of regression channel, like bang bang, boom. It's just,
I love channels.
yeah. So this point too, Leanne, I think this is where we're at right now. This is kind of the exciting, or what I'm watching is, I think we're going to see a very clear box range accumulation build on a larger time frame. So some of the other altcoin sector blows up. So like Algorand will have 100% box out of the run. You know, BAT will. Well, I think Ethereum is actually going to give us an opportunity to have a creek here, basically after the elections.
Test the middle of the channel.
Yeah,
usually,
and then boom.
And retest the bottom of the channel. Yep.
Yeah. Well, so if we think about this reaccumulation range that we're looking at, well, we've got our own PDFs that we're working on for these ones, but this area where you get stuck below the resistance, fall down the creek, I think we're going to get stuck. You know, we imagine that our creek is like this or something, so we're going to get stuck below that creek here, jump up beneath it, hit the regression line, all the craziness from whatever election, the people believing that macroeconomics has anything to do with this, and when it doesn't, it just happens to line up because market man is good at this game. Then right after the election, December into Christmas, boom, just massive explosion for Ethereum. And then everyone starts to recognize that we're like, hey, we're in a bull market. We're Ethereum at $800. Like, what were some of the other regression lines for Ethereum? On the weekly, it looks pretty nice, doesn't it?
Yeah, it's for a project that people thought was dead a year ago. DeFi's, you know, helped it take the stage again as well.
Yeah, I mean, you could be looking at a $1,900 Ethereum on a big wave like that. So this is how I would categorize it. This is why you want to get into the backup phases, because Cardano's already gone up to here and coming back down effectively. So it's not that interesting to me at this phase. It's much too much risk on, especially when there's so many that are still developing. But what you'll likely see is something like a wave 1 that would come up into May. They'd have another 3 to 6 month down campaign, and then a reaccumulation, something like this, a break above the box, and then boom, wave 3 and wave 5, and then another big market down cycle before a bigger accumulation area happens, maybe around the $1,000 point, to build out this box range that we see coming from our previous distribution into 2025. And that's how far you.
Calvin's got a question for you too, just to let you know.
Oh, okay, great. Can you want to read it by chance? Can you read it by chance?
Yeah, absolutely.
Thank you.
Calvin asked, if that's the case about unprofessional comp man, how do you really know if all you're doing is charting period, not giving a shit about the company? Let me try and understand that question.
Yeah, I don't care about fundamentals on a short term.
I don't care about them either. After a few years of trading, I don't care about fundamentals either, which sounds awful, but I don't.
Yeah. The better you get at it, the more you realize it's not.
He's referring to KMD. Sorry, Calvin.
So if for KMD it's unprofessional comment, how do you really know if all you're doing is charting period, not giving about the company?
Can you elaborate, Calvin, on the question?
I don't think I understand that necessarily either. What's your take on Algorand's 22% run today? Yeah, normal for an LPS That's why we try to buy as much of the LPS as we can.
Yeah.
But no, not financial advice. So I'm assuming maybe what you're trying to say is if I'm not caring about fundamentals, how can I tell if it's not a professional comp man? I'm just looking at the money interest value of the clarity of the phase itself. Like Ethereum here is crystal clear. It is beautiful. It is a textbook play. That means there's an enormous amount of money here, and look how long it is too. You're talking again 800 days from primary support to backup, maybe, and then maybe even 800 in total to get us to where we finally break out. That's a serious market, man. And look at the beauty of this spring. And the fun thing too is when you see how much energy they have in the box at 158% or whatever, this thing, when it goes, we could very easily see $1,900 Ethereum into 2022 based off a much bigger bull market. Most people didn't get into Bitcoin at $600 like when the good first like wave one started, where you're talking about like this is Bitcoin at $400 for Ethereum, right? Or something like this. I mean, Ethereum, we don't know how much higher Ethereum could go. It could go way higher, and it could take take a slower approach to get there. Effectively,
Okay, Elvin's happy with your answer. That's
okay,
good.
nice. Well, that's great. I love, Leanna. I love I love this chart now that, because for a little while I was really confused on what the hell Ethereum was doing, and now that I see it, like we started charting Ethereum only versus US dollars. It's one of the only ones I chart against US dollars.
Yeah.
Oh, it's crystal clear. And I love that you guys made that IOTX play too. Were you in? Did you get into IOTX?
Yeah, IOTX and IOST, I think's in its ready to blow stage as well. I've been in that for a little while in the D phase. Yeah.
Yeah, IOST is.
Yeah, IOTX, yes, I was in, and the IOST, which I need to chart this morning actually. I need to see where it is, but I have taken position in that one too.
Yeah. Look at that spike down on the bottom and that instant return. 30%. Just ridiculous.
You've got the chart there.
Yeah, on an IOST. Oh, did I stop screen sharing? Yeah. So yeah, this is IOST.
Yeah, I've been I started a position at the bottom of the LPS. That was one where I haven't taken the actual breakout, but I am building a position in it.
Yeah. It there's a lot of explosion right there. This looks more like a clearly defined comp man play to me again as well, versus something like Komodo. Same with Quantum. Like look at Quantum is just beautiful. Massive SOS. Oh, I didn't have the regression charts on this one. Massive SOS. Not even to the bottom of the regression line. Like just a very sexy play here on Quantum. Very similar to what happened in Algo too, where you see we couldn't even get back to the bottom of the regression line before we turned upwards. We got to the middle regression line before we turned up. I think that's what we had in Quantum too, was it? Double check here. Yeah, in Quantum we made back to the middle regression line, which was technically starting from here. Boom, like this. Yeah, such sexy plays, Jesus Christ.
Yeah, when you spot the patterns, yeah, I mean, I'm constantly learning too, even after a few years. So it's great to watch come to fruition.
Yeah, that's one of the things, right? Is really gaining the patience and the respect for what a trading strategy like this can do, especially if you've been, like Leanne, how long have you been buying? Like, when did you start buying first cryptocurrency?
2017, I started trading course, and by the end of 2017, I was ready to execute and got a little bit wrecked.
Yeah. It's you. Yeah.
I was trading well, because I'm tech, to anyone that doesn't know. Sometimes you might see me with candlesticks, which I know you hate, Tio. I'm trying to get rid of them, but that's how I was trained. And I have obviously changed more into energy formulas with moving averages, which is what a lot of you see when you see my charts. But I did some beautiful plays, but the greed and not having seen a full market cycle is what killed me in the end. And I vowed for that never to happen again, to watch things go back to zero. So,
Yeah, great point.
so for 3 years, I've been refining my skills. So.
Yeah, that's important. I think a lot of people get
Yeah.
stuck in that hodl mentality because it is easy to look back and see all the people that sold Bitcoin. Well, look, you're supposed to re-enter. You're just supposed to know when to re-enter. That's the only difference. You're supposed to know when to exit and when to get in. You need both of those things.
Absolutely. And looking at the daily chart is so important, whereas you can get really bogged down with small time frames, which I see happen in other groups, and it's confusing to people. And it's fine if you're a day trader, at the charts for, 20 hours a day. But if you have other enjoyments in life, then the daily chart's the best one.
Yeah, you zoom out, you give yourself all that time to make tables or whatever you happen to do.
Yeah, exactly. and you can nail your entries down to 4-hour charts. They're a good one to look at for entries and exits, but the big picture is so important. I think if you're new to the space and you're learning the daily, you'll have a great chance at really getting it right, because a lot of people's point of failure is the low time frame.
Yeah, being able to zoom out and look at the year just like that alone as a skill set is so, when in doubt, zoom out kind of thing. That's where it really makes a difference. See how like playful my charts have got. You like my rainbow here?
I like that you're bringing some fun little things like that. I love that. Now I've got a quote for everyone that I wrote down yesterday listening to a podcast.
Yes.
Success is perishable. Learning is not.
Yeah. Yeah. Yes. Bewilderment. The enjoyment to observe the unknown and go in it with open arms. It's that's such a
I was listening to a podcast, and it was a big hedge fund manager, and he said it takes 3 years for his traders to really get the gist of the markets, and he backs them for 3 years to make epic failures to learn from. And he said after 3 years they're usually ready to go. And he used that analogy. Success is so perishable. You can make a few really good trades, but his best traders who've been trading for 20 years never stop learning. So I think that's important. I wanted to leave you with that reflection.
I love it. I'm glad you were online and help round out some of this
The
webinar.
Teacher, also, for those people that don't know, I was a teacher for 15 years, so I can't help but love this stuff either.
Yeah, right. It's because when you get it right, it's not just the monetary, it is like finding a scientific thesis in something that you're doing. That's what I set out to do here. One of the things that I've been really excited about this part for me was that when I first set out to trading, I set out with the thesis that you can't escape consciousness, so that it's everywhere basically, so that no matter where you go, even in the markets, you'll be able to find consciousness, excuse me. So I think this footprint is kind of like the first time I feel where I'm like, oh, we've identified consciousness's interest in markets, and here's how we can use it to our advantage. And it's not a new thesis, but you don't have to reinvent the wheel. It will work regardless of the bots, the algorithms, whatever assets you want to change into. It's such a fantastic thesis. So I'm really glad.
Absolutely. Yeah. And I was talking to Willy Woo, who's a very good friend of mine. Some of you might know him from Twitter. And we were talking about, growth in learning too. And he's a data scientist, but he's always discovering new things and elements to add to the consciousness of how he works. So it's brilliant. Love it.
Beautiful. So we'll leave it at that. There's an hour and 20-minute long webinar. I think we covered a lot of fun things tonight. Again, Leanna, really grateful for that. The interlude there, very helpful. I think a lot of people will find that helpful as well. Because then again, it's not. I don't want to. It's like not why just highlight one person? Like there's so many people in the group that have been doing well the last little while. And you specifically been really good at those backup phases. So I'm glad you're on tonight's call.
Theo, just before you go, even though I know you're wrapping up, there's a question from Michael that asks, can a newer coin like Link, that's already reached its high in the range price discovery, is it possible to apply it even though it's gone through corrections?
Yes, Wyckoff, if you were to look at where Link is right now, I looked at it with one of our private members on a private consultation. It's likely in distribution. Now you could watch in the 4-hour and you might see a reaccumulation because it is a very strong market leader. At that point, just you're most likely looking at a distribution, which is going to come down lower. Again, I would be more interested in watching the 4-hour, but for the beginner, you're going to have a hard time because you're going to get caught up in some of the nitty gritty aspects if you're in the 4-hour, and it could send you for any type number of whirls. Whereas here, after identifying like an 800-year or an 800-day accumulation period, we have a very easy play here, whereas with Link, it seems most likely to be in distribution, coming down, and maybe coming down quite a bit lower, because I haven't seen a reaccumulation period yet. So what you'd want to look for is one of two things. You'd want to look for an accumulation period or a reaccumulation period. But right now, all I've seen is distributions come off the top of Link since then. So if it hits a box range at a bottom point and does like builds a smaller accumulation area, then yes, it could go up higher. But currently, all the breakdowns of the trading range that I've looked at are in distribution, which is something we haven't gone over yet, because that's the selling area. And most of what we're trying to do is get people in at the bottom and then out at the top, because shorting is a whole nother ballgame, which would be to sell the top of the market short, which is the whole nother level of skill set generally than just finding a bottom, buying and selling it at top. So this is much easier. Once you go through that, you'll have figured out margin.
Yeah, much easier. Yes.
Yeah, it's like long. Don't worry about that yet.
Yeah, we hopefully won't have to worry about that for a while.
Yeah, exactly. Well, thank you guys all for joining us. That's fantastic. And do your homework, do your due diligence, and keep repeating these patterns. Wyckoff, chart as many as you can. And from there, when you go into the group, if you are learning something and you see someone else that's learning something and you can help them correct a question they have, do that, because it then reinstills what you've learned to an even deeper degree. Part of the one thing, like one of the most powerful aspects about a mastermind group like this, is that you have the ability to have peers review you, but you also have the ability to become the peer that's helping review others. And that it just increases your time on deck and your ability to speed up the learning process for yourself and for others. So I suggest it. It's one of the quickest ways. So that's why I do it, because I'm able to massively accelerate my learning process by then going and having to articulate it clearly to someone else what it is that I've just learned. And if they can grasp it, then I've done my job correctly. And at the same point, then it means I know what I'm talking about because someone could understand me. Yes. So, yeah. We'll see you guys in the group. If you're having any troubles finding your way around in the Discord channel, just ask one of the admins or myself. I'm in there quite often. If you have any other questions, drop them in the chat. Introduce yourself. Take your time. Be patient and try to remember that this is much better looked at as a decade-long skill set, because buying and selling takes time, and you'd be better not to think of just getting rich quickly, but getting rich eventually. It's just a much better, like, you're more assured wealth that way. You try to get rich quickly, you'll go, I know the quickest, I don't know how to go get rich quickly, but I can tell you how to go broke quickly, and that's by trying to get rich quickly. I've made a lot of money in a very short period of time, but it's not because I was trying to do that. It's because it was a symptom or a side effect of a project or a company that I had built that was providing value and service that took a long time into that moment before I actually got paid for that, what looked like all of a sudden we're making a lot of money. It's like took a lot of time to get to that moment. So keep that in mind, keep that time frame in mind. When in doubt, zoom out, look at the year, look at the 2, 5 year, and really get a clear picture of where we are. It's beautiful to see so much green in our perpetual indexes on all of the lower cap coins that we've been investing in the LPS phases. Not financial advice, Steve with the Arcane Bear, and shout out to Leanne and Glasswalker for helping round out the conversation and all your guys' great questions. This was the first PDF, which you can find in the education materials, and you'll be able to find on the website. There's 3 more that we're producing. Oh my God, I'm like turning into a teacher, Leanne. What happened? It just makes sense.
Yay! I love it.
Yeah, just makes sense.
I love it. I love it.
It makes me get better at what I'm doing, and I have to take that extra time. I always actually love teaching music because of that too. It forced me to go back to that beginner moment, and I always got better because of it. Being able to see the way people make mistakes again, it reminds me of mistakes that I might be making, but at a larger scale. When you see someone making like little tiny mistakes, you're like, oh, this is cute. That was like a cute mistake or some shit. Like I bet you if you could understand, if you could ever listen to me speak Spanish and you really knew Spanish, you'd be like, this sounds like a 5-year-old kid. Anyways, we'll leave it at that. Thank you guys. And yeah, anyone want to say, if you could say, let's leave it at that.